Hello and welcome back to the channel. Today we are going to be discussing about credit rating agencies and one particular company in focus, which is the Care Rating. Why I've chosen Care Ratings company out of the three listed companies within the Indian space, which is CRISIL and ICRA, is that Care is one of the unique companies which doesn't have any investment from the Western world. So CRISIL has a market cap of 10 times of what Care has, and CRISIL has a major investment from S&P. So 67% of CRISIL is owned by S&P, and within ICRA, we have seen that Moody's has made an investment of close to 50%. So that leaves out Care Rating. And why I bring forward this point is very important, because globally, if we see, the ratings agency is dominated by three companies: Moody's, S&P and Fitch. Now, these rating agencies have rated India BBB minus. That is one grade above junk bond. What it does is, it makes India's credit more expensive. According to an expert, if India's credit rating was done by a homegrown credit rating agency, and it would have done based on all the factors, the credit rating for India, there was a possibility that India's credit rating would have been 2 notches higher. 2 notches higher would mean a difference of 0.25 to 0.5 basis points on the loan scale, and that could have saved India close to 40,000 crore. We are talking about credit ratings for India being lower than some of the economies like Portugal and Spain, which is struggling quite a lot. Care Ratings, it is one of the leading credit rating agencies in India. It has 30% market share. Majority of its revenue is coming from doing credit rating services, but it is also growing its analytics and research wing quite rapidly, and the name of that wing is called Care Edge. The company provides various credit ratings that helps corporates to raise capital and make an assessment to form an informed investment decision based on the credit risk and their own risk return expectations. Anything to do with credit, from raising loans to bonds, credit rating agencies give their view. A lot of times you've seen that once Moody's had rated Bharti Airtel as negative in 2017, and from there on, Bharti Airtel stock and the business has performed phenomenally well. So that is one of the crux of the credit ratings business, is that there are so many disclosures that once you've made the disclosure, we have seen what has happened in 2008. They had rated assets that were listed in America. So they can get away with being wrong. They can get away with giving a rating which later on does not turn out to be true. And within the business, most of the value investors, Warren Buffett, Charlie Munger, they tell us to find a business which has a high defensibility, a business which has a huge barrier to entry, a moat. When we talk about Care Ratings, ICRA and CRISIL together hold 95% of the market share. There are few other credit rating agencies that are emerging, but they are fighting for that 5% pie. What really happens is that once the corporates start working with a particular credit rating agencies, then they go by reputation and they will go by consistency. So once you've built your reputation, they would stick to a particular credit rating agency. And once the credit rating agency really gets it deep into the work, analyzing a company to give its credit, then there is a friction that is created. So to shift from one credit rating agency to another, not like there are many, but even to shift from one credit rating to another, it would involve huge costs and a huge knowledge transfer, and that could cause huge barriers to entry. Hence, when a credit rating agency does come in and does start giving out the ratings and start analyzing a company, then it becomes very sticky. It becomes very highly unlikely that companies would switch from one credit rating agency to another. Currently, there are no such regulations. How it is for the audit firms, that according to the company's law, they need to keep switching the auditor. So we will have to move forward and see exactly how it goes. But essentially, the business does not require a lot of capital. All it requires is personnel and highly qualified personnel. And credit rating agencies' productivity per employee is the highest out of the three rating agencies. It also is giving good dividend of 1% and has done reasonably well in the past in terms of price action. One of the big investors out of Zurich, Mr. Guy Spear, who runs the Aquamarine Fund, is invested into two companies. One is Indian Energy Exchange. I'll attach the link to the video up here, and the other one is Care Rating. So he's invested in these two companies, and his general tendency is to be invested in good brands which are reliable. So he's invested into companies globally like MasterCard, Ferrari, S&P he was invested in. His first investment in India was CRISIL, but unfortunately he did cut his position and then he went out. But till date he regrets it, because that investment alone in CRISIL could have resulted in that position of CRISIL being more than his entire fund at a particular point in time. So he did make amends, and then he came into Care Ratings. In terms of the price to earnings, I believe is quite reasonable at around 32. And really, this company is a compounding machine because it's generating cash and its activity is linked to credit offtake. Now, there are two ways you can play the credit offtake cycle. You can either invest in banks, or you can invest in NBFCs or the stock like Yes Bank. A lot of them are a fan of Yes Bank for some reason. Or you can take the safer route. You can take a route through which you can invest in a company which gives its rating, and even if it does not do well or it is wrong, so how we saw in ILFS, Care Rating had to pay a penalty of 1 crore, but it's still operating and it's still thriving, given record profits during this periods of time. So this is one of the unique businesses that I wanted to bring out and highlight. Do let me know in the comment section anything that I missed out or anything that you think could aid me in my analysis. I haven't gone really deep into it, but I just wanted to give you an overview how this business operates and the working model. I haven't gone deep into the numbers. Do let me know in the comment section if you want me to go deep into the numbers, and I can do a subsequent video really going deep into looking at some of the numbers that our business is generating. Thank you so much, and hope you have a lovely day ahead. Thank you.